Thank you so much, all of you, for joining us on Mongo Spaces this Tuesday evening to have a really good discussion around markets and just creating wealth, which is a topic very close to my heart. My name is Eric Mokaya. I'm the host. I really like engaging with money managers to see what they do and how they manage to create wealth for people, both in terms of helping people grow, preserve capital, and increase returns at the end of the day. Today, we are very privileged to have two very able speakers who are part of the kind of the new kid on the block in asset management, Stanbic Asset Management. So we want to dig in, understand a little bit what they do and how you can be part of their wealth creation journey. So I'll introduce them by name and then they can give us a bit of detail. I'll start with the head of asset management, who's Christian Wirigi. Maybe you can tell us a bit about yourself and what you do as head of asset management, and then I'll come to Jimmy. Christian, over to you.
Thanks, Mukaya. As you've heard, my name is Christian Wirigi. I am an investment professional in the financial services, covering both banking, insurance, and asset management. And it's a pleasure to be here with you today. And I want to impart some knowledge onto our viewers and listeners who are here today. Thank you.
I'll come back to you and then you'll tell me a bit about your journey in terms of investment. Jimmy, maybe you can say a little bit about yourself.
Thank you, Mukaya. Good evening to all. My name is Jimmy Karanu. I'm a portfolio manager sitting within Stanbic Asset Management, which is part of a wider group that's called Insurance and Asset Management as part of the Stanbic Bank. Pleasure to be here. Equally eager to impact knowledge and also talk a bit about our new offerings, which is the Stanbic Money Market and the Stanbic Fixed Income US Dollar. Thank you. Okay.
I want to start with Jimmy. You are the portfolio manager. So perhaps you can tell us a bit about your personal journey towards becoming a portfolio manager. How has that journey been like? And give us a few career highlights for you. What's your journey been like, portfolio management?
Sure, Mukaya, and thank you for the opportunity. So my career basically started off in mainstream banking. I did a couple of years, roughly 3 years in mainstream banking, but that basically made a good foundation into my transition into the dynamic and exciting world of asset management and investments. I transitioned to asset management, and I was fortunate enough at the time to join an exciting startup. So I was part and parcel of the core team that established some few funds, which over the course of time did rise to become the second largest money manager in Kenya as of last year. Today, I'm once again fortunate enough to build something special and being part of a new venture in the investment space. So I do carry slightly over a decade worth of experience in terms of asset management, investments, and pension. That is my journey as to the current position of a portfolio manager within Stanbic Bank. Thank you, Mukaya.
Thank you so much. Wirigi, tell us a bit about your journey towards asset management.
Thank you, Mukaya. Just to begin with, I think mine is actually a long history. As early as when I can remember in primary school, I'd get my hands on to a Newsweek magazine, Economist magazine, and I found myself very pulled to the global economics and, more importantly, the business and economic section. And I remember asking my father, what are shares, what are bonds, what are view? And that was actually as early as maybe I think I was 8 or 9 years old when I could read a magazine. And it got to a place and find also, and even someone had to come to the house. By the time I was about 10, 12 years, I'd actually set my sights on being in Wall Street. By that time, I knew what that meant. And fast forward again, after secondary school up to uni, I knew I was doing finance and I was on that line. And I did a Bachelor of Commerce, and that helped me in the market challenge. It was called the NSE Stock Challenge as a first year or second year, I can't remember. But actually, it was the best in the country that time. And the number 2 was way backward at maybe a distant negative position. So that I was able to do that. That got me landed into financial services. I did start from in brokering, getting my way into banking, to asset management. And I've gone round and back, and I'm actually a fully fledged financial services provider. Thanks.
Jimmy, maybe you can tell us a bit about Stanbic Asset Management and maybe a bit of background info.
Thank you. Just a bit of background information. Our asset management business was actually founded based on extensive research that we took within the bank. So we took the time to engage our clients to better understand how we could meet their investment needs. And one key insight that came out quite strongly was that while we were very strong in solutioning around their long-term and medium-term goals, and for this you'd think about your normal treasury bills and bonds, your infrastructure bonds, your euro bonds, and equally your stocks or your shares, it came out quite strongly that there's some work that needed to be done in terms of the short-term offerings quickly. That's where now our unit trust offerings to plug in that gap. So we do have offerings that are both in Kenya shilling and US dollar denominated. And we introduced these products with a low entry point that was quite intentional of us. So for example, With as little as 1,000 Kenya shilling, you can be able to partake in our money market offering. And with as little as 100 USD, you're able to partake in the US dollar offering. That is quite intentional because from where we sit, we want to equally provide accessibility to these solutions because we believe that's part and parcel of promoting financial inclusion. So we are a digital investment arm. And I think as we go along, we'll speak more to what the solution tries to achieve and how our clients can be able to partake it. So that is basically the gist of what we've been able to establish so far. But I'll allow Christian to equally chime in, just in case I might have left out anything. Christian?
Yes, thanks, Jimmy. I think you've actually captured it. We want to make this opportunity as available to the broader market as possible. As you have said, a Standard Bank Group, where we are a subsidiary, Standard Bank Group, our policy is we are Africa, we drive our growth, and in Kenya, we drive Kenya's growth. So on that perspective, our point is we want to mobilize deposits, we want to mobilize investments, and how can we use these investments for infrastructure?
And perhaps you can tell people a little bit about what a unit trust is.
So a unit trust is basically a pool of investments. We've made this a fractional entry-level investment for as low as 1,000 shillings. You can actually invest in a money market fund. For as little as $100 for our listeners, you can actually get an opportunity in a USD investment. So we're saying we are, as what we say in our motto, Africa is our continent, we drive her growth. And in Kenya, likewise, when you drill down, Kenya is our land, we drive her growth.
The question now has been answered what a unit trust is, but then from the moment someone hands you the $100 or 1,000 shillings, what happens next in terms of investments, Jimmy, as a portfolio manager?
Thank you. So allow me to pick it up and introduce some of the key players that are involved within a unit trust arrangement. So as we've had, a unit trust basically is a savings pool that allows individuals such as yourself and me to pool our market together. It's invested in items such as treasury bills, bonds, stocks, and other asset classes to be able to generate. So having said that, it is also worth mentioning who the participants are. Of course, you have you as the investor who actually comes into this arrangement for your investments to be invested on your behalf. And the other question is who invests these funds on your behalf? So that is the fund manager. So the fund manager is basically an expert who makes the day-to-day decisions as to where this pooled money will be deployed in order to earn a return. So in this case, of course, a big Stanbic Bank is not only the promoter of these particular funds, but we are equally the fund manager as well. The other party to this arrangement is somebody that is called a corporate trustee. So a corporate trustee oversees the funds to make sure that everything is done properly and fairly, and that no single investor is disadvantaged in one way or another. The other party to this arrangement is somebody who's called a custodian. So a custodian holds and safeguards the actual money or assets or the investments on behalf of the underlying clients. And ladies and gentlemen, the underlying clients are you and I as the investors. And lastly, we have the regulator. So the regulator actually is there to make sure that everyone follows the laid down rules and procedures that are necessary for this arrangement to work. So basically, those are the players, and all these players work together at the end of the day to help and ensure that your money grows and also grows in an environment that is safe and one that actually takes care of the various risks that are associated with investments. So having said that, so basically from where I sit as a portfolio manager, when these funds come in, of course, there are certain laid down procedures in terms of what I can invest and what I cannot invest. The funds also speak to the nature of the investment. For example, when you look at a money market fund, a money market fund is the most safest form of what we call unit trusts that you can partake in. It is designed to ensure that the investments that are contained within that pool are as liquid as possible and are as stable as possible to be able to not only give you a competitive return, but also ensure that your funds are actually readily accessible should you need to access the money. So I'm hoping I've been able to elaborate on that.
So they're the custodian, the trustee, the regulator, and the investor. Can you repeat again what they do so that the investors in this case can also understand a bit better what they do, the various players there?
Certainly. So once again, in terms of the players that are involved within a unit trust arrangement, so we have you as the investor who basically brings in money into this pool that we are calling a unit trust funds. Then we have the fund manager. So the fund manager in this case is Stanbic Bank, myself included. So we are a team of experts who decide on where it is this money that has been pooled together, where it will actually go to be able to make a return. So it will be invested in securities such as treasury bills, fixed deposits, call deposits to be able to ensure that the funds that are contained within that pool earn you a decent rate of return. Most importantly, something that will be able to beat inflation so that you actually get to enjoy a real rate of return once you factor in the effects of inflation. The third party is what we call a corporate trustee. So a trustee oversees the funds to make sure that everything is done properly and fairly. Another player, in this case, the fourth one, is called the custodian. So the custodian holds and safeguards actual monies and securities and investments on behalf of the underlying clients. And lastly, we have the regulator. So the regulator is the party that ties all this together to make sure that everybody follows rules and regulation. And most importantly, ladies and gentlemen, the regulator is the person who offers license to these players, with the exception of the client. Basically, you'll not be licensed, but all the other players will actually be licensed by the regulator. In this case, our regulator is Capital Markets Authority.
The reason why I wanted you to repeat all that is because people think asset management operates in a vacuum. You give them money and then you disappear with it. So it's very important to know there is a supporting base and cast behind you to help drive this asset management business. Perhaps you can drive that point home again, that money is safe when it comes to you.
Yes, I think other than from a regulatory point of view, so as I've indicated, this arrangement operates within a certain framework. So there are basically laws and there are rules and regulations that a fund manager needs to during the process or during the course of doing these type of investments. As I said, the fund manager is duly licensed. The professionals who sit within the fund management side also need to have some form of professional qualifications to be able to do what we do and to be able to invest on your behalf. The trustee is equally a regulated entity as well, and they do report to Capital Markets Authority. And the custodian is basically there to ensure that we do not commingle funds of the asset manager and those of the clients. So all this structure is there to ensure, first and foremost, that there's safety in terms of where your money goes, and that the whole arrangement is there to ensure that you basically have peace of mind whenever you do invest. If I'm to go a step further and just indicate, the products that we are talking about are offered by Stanbic Bank. Stanbic Bank is part of a larger institution, which is the Standard Bank Group, with over 160 years presence within the financial services space, a lot of presence in Africa region. And I think that's what Christian was alluding to in terms of our motto that Africa is our home and we drive our growth. And part of that agenda is what we are talking about. We believe that the entry point for these particular products is comprehensive enough to be able to now bring financial inclusion, and just to say that equally Kenya is our home and we drive our growth. Thank you, Mukaya.
Thank you, Jimmy. Can you tell us a bit about the products that you're offering and the key features of those products?
Certainly. Just to indicate, at the moment, we have positioned two products that serve two distinct needs. So the first one we have is a Kenya shilling denominated products in the name of a money market fund. The nature of money market funds is that they are ideal for short-term investments. And when I say short-term, it can actually vary individual to individual. So it can be funds that you're putting aside for a week, a month, 6 months, a year, and even beyond. What we've done to this particular solution is that we've tried to make it as much as possible that it is goal-based. So you can have multiple accounts that speak to your different needs or your different goals. For example, you can decide that I want to do some form of travel in the near future, and what better way to do that than to start saving at this point in time. So you could have an account that speaks to your travel needs. So your travel would be your goal. You can have a sub-account that speaks about your dream home, an account that speaks about your educational plans, and all these are delivered to you in a very convenient way that you can actually consume the investment itself. So to start with, what we are saying is that we have a digital onboarding journey, and we equally have a digital way of interacting with the investments. So the key thing to note is that you dial *208# and you should be able to equally see our money market funds preloaded on that platform. You basically follow the steps. Opening the unit trust account will only take you less than 2 minutes. It's an issue about accepting that we can be able to utilize your data that we currently already hold as a client to be able to set up the account. And you basically choose between a money market or the fixed income dollar fund. Having said that, the money market has a minimum investment amount of 1,000. The current rate of return is around 15%. That's an effective annual rate. So it's a per annum rate. Equally, if you have some dollars tucked away somewhere, and I think equally what our research has shown us is that at the beginning of the year when the shilling was actually straining against the dollar, I think some of us ended up accumulating a bit of dollars. And at this juncture, we might not know what to do with it, or we might be parking it somewhere just waiting for that rainy day. Ladies and gentlemen, again, the fixed income US dollar fund comes to your aid. This is a product that you can also open by dialing the *208#. Again, you'll see it's available for you to use. The rate of return currently is at 5.8%, quite competitive rate of return. And the minimum investment amount is only $100. The same platform, which is very interactive, will allow you do other items such as top up your investments, view your balances, and equally make withdrawal requests. We also have more information on our website, but I'll get to that.
Yes, we see trying to get Christian back. So we'll continue with you. So perhaps you can also discuss the fees and the costs that are included in terms of investing with you. And as you said, it's as easy as dialing that USD code and be able to start the investing process. Is there any other thing that someone needs to do to get on board?
Certainly, it's as easy as dialing *208#. We do have a manual onboarding journey just in case for one reason or another the digital platform fails with an error where technology does fail us at times. However, for the most part, it's a journey that works. So it's actually quite seamless. And even for some of us who are on call, it's something that you can even do as we are proceeding with the conversation. In terms of fees, which is quite critical to tackle, and I'll take us back, the whole architecture of unit trust funds, I think I ended up mentioning 5 key players. If we exclude you, the client, we are left with 4, namely the fund manager, trustee, custodian, and the regulator. And for this arrangement to work, there needs to be some form of fee structure that needs to be factored in somewhere during the course of operating these funds. So ladies and gentlemen, for clarity, the money market fund levies a management fee of 2%, whereas the dollar solution levies a management fee of 1%. The rates that we have discussed about, so when I say the money market is generating a return of 15%, and when I say the dollar is generating a return of 5.8%, those returns are already net of the management fee. So you're not coming back and deducting a second time. I repeat, the rates that we are quoting, the 15% on the money market and the 5.8% on the dollar, is already net of management fee. I hope that clarifies, Mukaya.
Definitely. Yes, we are almost midway through the conversation. Please do DM us your questions below the pinned tweet. Also, let us know any questions that you have for these money managers from Stanbic Asset Management. Perhaps you can tell us a bit about some of the assets that you're investing in. Dig a bit deeper into once the money comes to you, how does it flow to the various asset classes, and how do you as a portfolio manager do your investment allocation amongst those asset classes in such a way that the investor is able to generate a good return on that?
Excellent, and thank you for that question. The detailed regulations, what we say, the do's and don'ts, are actually contained in a document that's called an information memorandum. Ladies and gentlemen, the information memorandum for our funds has actually been loaded onto our website. So when you go to our website, you'll be able to see a detailed document. Part of that document actually addresses the question that we're tackling. So what do I really invest in once the money comes in? So there are some certain asset classes that are unique for money market. So I'll give you an example. So for the money market fund, we'll basically look at very short-term investments. So those are your treasury bills, those are your fixed deposits and call deposits to be able to manage what we call liquidity. Because for this particular fund, you have clients who are coming in, you have clients who need to go out, and basically you need to service those requests. So that is technically how the fund operates in terms of the money market. What you'll realize is that for all money market funds in Kenya, in as much as we've actually indicated what the rates are, the public should not confuse that to imply that this is a fixed rate of return. It is incumbent upon us to ensure that rate is sticky as possible. However, it is not a fixed rate of return because of the open-ended nature of the fund. You always have clients who are coming in, coming out. However, it's very sticky. And what happens is that when we are doing our performance or when we are issuing statements, we normally include something that is called a fact sheet. So it's an accompanying document that sort of paints the picture as to how your investments has performed vis-a-vis the environment that we find ourselves in. So that particular document is the one that will give you an indication whether, for example, interest rates are on the rise, so you know what to expect in the coming month, that your investment will slowly continue earning more, or whether interest rates are falling, because remember, your money is invested within a certain environment. So that will give you an indication of what to expect. For the other product, which is dollar denominated, not to be confused, I know the dollar product has a naming that is slightly different from the money market fund. So for the dollar, we are talking about fixed income US dollar offering. Fixed income should not confuse you to imply that it is a fixed rate of return. To the contrary, it actually works similar to how the money market fund works. The only difference is that we are using the word fixed income to indicate what the underlying investments are. So whereas for the shilling product, you can look at things like treasury bills. You'll bear me witness, for the dollar side, we do not have an active treasury bill market that is dollar denominated. at least in Kenya. So you find for us to be able to generate some form of return, we need to look at securities that are a bit longer in nature. And an example for that would be your Eurobonds, for example. So those would be part of the securities that will be able to generate a decent amount of return on the dollar fund. So having said that, the naming convention needs to speak to what the underlying investments are. The other question that I would probably expect is if they are more or less the same, but the naming sort of suggests as if there's a slight variation, what that slight variation is on the side of the yield. So whereas the money market return is more linear or more smoother, the return on the dollar side, because of the underlying securities, might dance slightly simply because of the underlying securities and how they actually work in terms of pricing aspect. So I'm hoping that does clarify. But of importance is that it is incumbent on us as the fund manager, as we look at these funds on a day-to-day basis, for us to make those decisions on your behalf to ensure that you do get a competitive rate of return with a minimal risk to your investments. Okay?
Those are very, very important points to double click on. One, in terms of risk, that the return is not a flat rate that you just expect, and in time it matters when you're entering and when you're exiting. So perhaps Jimmy can take that opportunity to discuss a bit of the risks, perhaps on the risk side in terms of investing. What can the investor also look out for, even as they seek to generate some good returns as they invest with you?
From a risk perspective, and I think on that front, it's important to see where money market slots in terms of this universe of things that we call investments. Different investments carry different levels of risk. And I think some of us we've grown up knowing that the higher the risk, the higher the return. So when you look at money market funds, they are designed to minimize risk through something that is called diversification. At the end of the day, the structure of the fund is that it being a pooled investment, you basically have what you call indirect exposure to multiple asset classes. So if it is treasury bills, you get a cocktail of treasury bills across the spectrum. So you'll have your 91-day, you'll have your 182-day treasury bills that are sitting within that pool. When you talk about fixed deposits, you'll actually have your money spread across different counterparties. We normally call them counterparties. To ensure at the end of the day, your risk is actually at a bare minimum through the aspect of diversification. So having said that, I think something else that we should be aware of as investors is that even as we gravitate beyond this universe that is called unit trust funds, because we do have other offerings that sit within the bank that we can equally position. For example, you can pretty much have an idea that I'm actually not only putting money aside simply for emergency purposes, but I'm presumably putting money aside to be able to earn some form of passive income. And in that consideration, you can think of something that is more and over and above a unit trust fund. For example, you can consider investing directly in an infrastructure bond. So the question is, what are the risks that are associated with doing that? So some of the risks would be a bit of volatility within that space, because remember, you're earning a fixed rate of return, but you're not operating in isolation, operating within an environment that's called an interest rate environment, which does go up and down. I think our central bank at some point we did see a cut in central bank rate. Right now, even when we look at globally, we are looking at advanced economies such as the US. There are conversations around cutting of rates from the Fed perspective. They should be meeting tomorrow on Wednesday, and all indications are that will actually have an impact back home. So I feel it's definitely a broader discussion to be had in terms of risk. But if I'm to narrow it down, how unit trust funds work is that it is actually designed to minimize that risk because of the aspect of it being managed on your behalf by a professional fund manager. And one of the strategies that we employ to be able to manage that is basically diversification. When you diversify, basically not putting your eggs in one basket, then you are able to bring down the risk to an acceptable level to give you comfort that your money is safe and it's still generating some return for you.
A couple of questions which have come in. Justice is asking, can non-Stanbic clients join the unit trust via the USSD? I think the USSD provided the *208#. So does that apply to only Stanbic clients, or can non-Stanbic clients also join that?
That is indeed a very good question. So how we've envisioned this particular product is that we are rolling it out in phases. So we have a phased approach as to how we are rolling it out. So currently, the *208#, which is a digital journey, does speak to clients who do have some form of banking relationship with Stanbic Bank. it's easier for them to simply go in and access. Having said that, we still have a physical form, what now we are calling the manual journey, that any of our clients can get access to, or any of our would-be clients can get access to on our website. Of course, it will need to go through a journey whereby you need to visit our branches to be able to now have yourself onboarded. It is equally critical that we also speak about our other capabilities within the bank. We would want to basically offer you a holistic solution. So it's something that we'll definitely encourage that you do set up a bank account with us, even if it is a simple savings account, and allow us to handle your investment journey from that perspective.
Another question that is coming through here is giving money to asset managers is easy for most of them, but then the exiting part becomes quite troubling. And I think we have a few experiences of that in our market to be able to speak to investors' worries around exiting. So perhaps you can tell people how easy is it then to exit from the MMFs, especially the dollar one. Specifically, that's what Chemoge is asking. And for how long has the dollar MF and been in operation itself? I think Chemoge is very interested in that one.
Thank you for that question. I'll start with the last one. In terms of how long these funds have been in existence, we did get our regulatory approval at some point earlier on this year, but we did go to market roughly 2 weeks ago. That was on the 3rd of September. And the funds have actually been receiving a lot of interest since that time. In terms of easy of access of funds, and I think that's an important question for us to dig deeper into. So how do these funds operate? So basically, when I invest funds, at what point does my investment take effect? And equally speaking, if I want to access funds, what is the process and what is the turnaround time? So in terms of investing, so how these funds operate is that when you invest funds, for you to get some form of return on the back end, there needs to be a process that actually is able to commit these funds to some form of investment. So having said that, there are some certain cutoff times that you normally work with to be able to give value date for an investment, when the investment was done and when it starts earning interest. And equally, when you want to exit, there needs to be a certain point in time whereby we're able to allocate value date. So ladies and gentlemen, the value date or the cutoff time for the Stanbic unit trust funds is basically 9 a.m. on any given working day. So basically, just to paint a clearer picture, right now we are having this particular conversation at 8:42. It means that if you make an investment at this point in time, all the way till tomorrow, which happens to be a Wednesday at 9 a.m., that is a cutoff, it implies you'll get the value date for Wednesday. Any transaction that is done after 9 a.m. will only get value date for the following working day, which happens to be Thursday. What you need to exclude is weekends, that is Saturday and Sunday, and any public holiday. So implying if you do a transaction on Friday past 9 a.m., you'll get the value date on Monday. I hope that is clear. So the same works for withdrawals. So if you make a withdrawal request right now is at 8:43, you'll basically get your funds tomorrow before end of day. So that process, we've just summarized it as 48 working hours for you to get your funds back. And I know the question was very specific to the dollar fund, presumably because of the name. It's called Fixed Income USD. Just to confirm, it works similar to how the money market fund would work. So basically, if you need to access your funds, both for money market and the dollar side, within 48 working hours, you're able to access either part of your investment or the entire sum that you've invested with us. Again, the other question would be, so how do I make the withdrawal? The *208 hash is still a viable journey. It's actually what is advisable because it's straight through. You basically go in, make the request, we quickly get visibility of that particular request and we're able to process it. There's still a manual journey for it. Again, the documentation is available on our website, whereby we do have a liquidation form that simply states out even where you're supposed to send it once you fill it out. And the turnaround times are equally stipulated on that website as well. I'm hoping that clarifies that query.
I think you've answered a lot of people's questions in terms of the investing side. One more question from Papa, who's asking, I think he's a Stanbic account holder, but he's wondering whether he can use the business account also to do the investing bit, or does he need an individual account only when it comes to investing in the unit trusts? Yeah.
Thank you for that question, and happy to see our clients are equally asking how to onboard onto this solution. So if you have a personal account together with a business account, the personal account will be the one that is linked to that USSD journey. It is a *208 hash. So on the personal side, you're basically sorted from a digital perspective. For the business account, we will have to follow the manual process. So we will definitely be able to share a form with you. Then you just fill it in, no need of attaching any form of documentation. Submit it to your bank relationship manager, your RM, or any of our branches, and we shall process it and send you feedback in terms of the account opening details, what the member number is, and what the next steps are for you to start investing.
Circling back to the issue you talked about exiting, I think here at Tumongo Capital, we're very keen on making sure people invest for the longer term. Could you emphasize the fact that you should not be coming in and out of the market every day so that you can generate that 5% return? It's not if you join today and leave next week, your wealth will have grown by 5%. So I think that's very important to maybe emphasize to investors who are seeking to put money with you. Invest for the longer run to allow you also to generate the necessary returns. Do I make sense there?
You do, and certainly it's a habit that we encourage. So I think one of the major reasons why we decided to equally make these solutions goal-based is that it also offers you an opportunity to diversify your investments depending on the different goals you have. So we are aware that there's some goals that might be more short-term, and there are others that might be long-term. At the end of the day, the nature of investments is that the longer you invest, the more you actually earn. And this potential of earning actually comes from the aspect of compounding effect. So basically, what you also need to understand is that when you are partaking these products, by default, what we've done on our system on the back end is that when you onboard yourself, by default, we are basically ticking a marker that says we should invest your interest. So what will be happening is that whatever you are earning, because your interest will be accumulated on a daily basis and credited back into your investment account at the end of the month. So you'll actually realize the longer you stay invested, the more you'll actually get to basically increase your wealth, because now you'll be earning interest of interest. Now, that is what we call the power of compounding effect. And of course, a year has 12 months. So basically, your investment will be compounding times in a year. So if you compare that with somebody who has only invested for 2 months, the investment has only compounded twice a year. Of course, the person who has invested longer has a better chance of actually actualizing whatever investment needs that they had. So time is definitely an aspect, and we do encourage you to invest for longer to be able to reap maximum rewards. And just for some of us who have been wondering, fine, I've always heard about these products, but I've never had the chance, or I've never gotten the opportunity to start investing. I think in terms of timing, internally we have a saying, it's actually a Chinese saying that the best time to have planted a tree was 20 years ago. The next best time is now. So we encourage you to start now, and we encourage you to invest for longer, because that will definitely give you maximum returns, even when you look at it from a compounding effect. So very much in agreement with you, Mokaya. The longer you invest, the better it is.
It's good to tap into the power of compounding. I think putting in that $100 maybe per month or something like that, establishing that as a regular thing that maybe just gets deducted to your account and flows into the money market fund can actually help you a lot, especially when you're also a client of the bank. You can easily do that within the bank. A quick question perhaps for you. There is a bit of, you say, the money market space, and people say it's a bit crowded. Maybe give a 1-minute pitch on why people should come to Stanbic Asset Management.
Thank you for that. And I think our pitch would largely focus on what our investment philosophy is. So basically, when we look at these investments, and when we look at the trust that our clients have bestowed upon us to invest their funds on their behalf, we basically look at key main themes. So we first of all look at safety, or what we call capital preservation. So we do a thorough analysis of where these funds will end up in. And of course, this is done in line with what the regulations do spell out. So of course, we are within regulation, but we further analyze and look at who are these counterparties that we're placing money with. They need to be strong financial institutions for us to have that comfort and have that trust in terms of placing funds with them. The other thing we look at is what we call liquidity. How easy is it for us to access the funds? Of course, when you run this fund, you do some form of stress testing and check. Should we be hit with a scenario whereby a bulk of our clients, which is not normal, might come for their funds at an increased rate? So you need to ensure that the funds you've placed are in a very liquid investment. And liquidity simply means the ease of converting the investment back into cash so that you're able to pay out without necessarily losing a lot of value in the process. Again, safety or capital preservation comes number one. Liquidity comes number 2. And we also look at the return as a third item. So definitely when you look at our returns, we are competitive, but of course that speaks to how our investment philosophy is. So return will be a component just to make sure that you're beating inflation and basically you're earning a real rate of return on your investment. The other thing to equally consider, as I had mentioned earlier, these are products that are being offered by a reputable financial institution within the Kenyan space, which is Stanbic Bank. And of course, we now look at the backing of the wider Standard Group, which is equally part and parcel of this journey. This is an institution that has been around within the African continent over 160 years, offering financial services to Africa and beyond. We do have learnings from the various other markets that you operate in. And basically, these are the things that we are bringing to the market as well. There are a lot of synergies that we can be able to leverage on to ensure that not only are our funds competitive, but they are as safe as they can get. And of course, just to cap it up, this is a licensed product, licensed by the Capital Markets Authority, who again ensures that we do everything above book. Thank you, Kaya.
Once again, repeat that USD code so that people can be able to know where to find you. That's just a quick one. And then we proceed with a couple more questions.
Definitely. So to onboard, simply dial *208#, follow the prompts. Asset management has been loaded as item number 9 on. That's the prompts. Within a span of less than 2 minutes, your account is set up. Again, within a span of less than 2 minutes, you have the option of investing, balance inquiry, and basically getting in touch with us. There's also detailed information to be found on our website, www.standardbank.com/Kenya/asset management, or you just go to your Google search bar and just Google Asset Management Kenya, and you should be able to see our offering on that particular platform, including the rates and some of the information that we've covered. Our email address is assetmanagementke@stanbic.com. And once again, the USSD code is *208#. Simply dial *208#.
Seems someone quickly went and used the USSD and he says he's unable to top up directly from his Stanbic account, but the M-Pesa just went through. So it seems could be a bug or something like that. Is that something you've experienced?
So I think what we can do for that, assetmanagementk@stanbic.com, kindly drop us an email. Then we should be able to look at that particular failure so that we can be able to establish what the issue is. But happy to hear that M-Pesa was a success. And that just goes to speak to how easy it is to onboard. So I would encourage, for those of us who are interested, kindly dial *208# and we'll be happy to support. Thank you.
That's the power of tech that allows someone that while you're speaking to be able actually to just invest and quickly get started. Very impressive compared to the good old days of you had to fill 1,000 forms to be able to get started. A quick one here for you. The same client is asking, are there plans to allow customers to use the mobile app to achieve the same functions via USSD?
Definitely. As indicated, ours is a phased approach. So other than the *208#, which we are currently positioning, we have plans underway in terms of incorporating this solution to each and every touch point that you have for Stanbic Bank. So this is something that will definitely find its way into our mobile banking application, into our internet banking platform. And equally, we do have a brokerage arm, which is part and parcel of what we call SBG Securities, where you can go in, buy your shares. These are your Safaricom stock, your banking counters. So it will definitely be part and parcel of each and every journey and each and every touch point that you'll be accessing your banking and your other investments from. So this will make it as seamless as possible for you to be able to move your money in and out in terms of your investment needs, be it buying a money market, the dollar fund, or even transitioning it towards purchasing of stocks. So it will definitely be a very seamless process.
Looks like we have a ton of questions for you. So one is asking, since you're new on the block, how will you ensure that diversification is achieved during the early years with the growing fund? That's a question from Tommy. You can answer that as I try to reach a few more questions.
That's okay, and definitely a valid question. So in terms of diversification, as indicated, we are new, currently at 2 weeks. However, on the back end, what equally our clients need to appreciate is that before we even went to market, and it's definitely part of a regulatory requirement, there was a period that we had already invested funds, what is called seed capital. So already before clients came in, we had a situation whereby the sponsor of this particular funds, which happens to be Stanbic, bank did have its skin in the game. So we already had funds that had already been invested just to be able to cater for that diversification aspect. And as the funds grow, it can only be stronger and better. So definitely it's something that we are alive to. It's something that we continuously do. We look at those portfolios on a daily basis, rebalance it to make sure that it not only speaks to the regulatory requirement in terms of how it's to be invested, but importantly that it also has that particular diversification aspect.
Martha is saying this is a very informative discussion. So Jimmy should come back again. Seems like people want to hear more of you. A quick one here from Manjue. She's wondering, maybe it's something you spoke about before, but where do you take clients' money once you have received it? So maybe you can repeat to her where you're investing their money.
Great. So money market, very short-term investments. So you have your treasury bills, you have your fixed deposits, and you have your call deposits. That is the money market. For the dollar fixed income, to be able to generate a bit of return, you can look at things like Eurobonds that are slightly longer in nature. Then now you fuse it with your fixed deposits and call deposit. That's basically where the funds are invested. And just to offer a bit of more comfort, once you are invested, there's a detailed document that will be coming your way on a monthly basis together with your statement that is called a fact sheet. A fact sheet will always have a column that is called asset allocation that will even have percentages. So what percentage of your money is invested in treasury bills? What percentage is invested in fixed deposits? And what percentage is invested in asset classes such as Eurobonds? Thank you.
A question here that came also is about where does Stanbic itself have the money invested in Stanbic asset management at the beginning, now that you're seed funding it?
Exactly. Yes. As I indicated, we need to have our skin in the game. Yes, we do have our own funds that have been invested in that particular fund. So it's part of the requirement.
I see many questions from Papa Wanazi. Maybe you can DM us and then you can be able to maybe give your contacts to Stanbic. They can reach out to you. He has many questions. I think some is about fees, which we've covered a bit earlier. But I think this one question for you, Jimmy, would be very important. So he's saying that you're competing against traditional government bonds that are secure and reliable. Why should they come to you? I think that's a key question. You can pitch to them why they should come to you and not invest in government bonds.
Definitely a valid question. And just to give comfort, at the end of the day, we still invest in similar securities so that it's quite clear that the funds are equally safe as well. And it brings in the aspect of diversification. So just to bring it clearly, when you look at investing in funds versus direct investing, the key benefits would be one, you have somebody who's constantly looking at the market. You might be a professional, maybe not in a position to be looking at the market on a daily basis to be able to make those particular decisions on your behalf. Here you have somebody who's doing it for you. You have the aspect of liquidity. So if you go for these other securities, you go for a 91-day treasury bill, you're locked in for 91 days. You go for a 92-day treasury bill, again, you're locked in for 6 months. 364, you're locked in for 1 year. Here we are saying is that you have an avenue whereby you can enjoy the returns, but not necessarily lock in your money for that period of time. As indicated, you're free to come in and out as you please, although we do encourage investing for longer to be able to enjoy the power of compounding. And lastly is the minimum entry point. So I'll give you an example. You look at those treasury bills, you need a minimum of 50,000 to invest. In the money market fund, we are saying you only need 1,000 to invest and get the same return that somebody is getting when they invest 50,000. I think on the dollar space, it's actually more interesting because you are saying with as little as $100, you get exposure to a security such as a Eurobond. For those of us who are quite familiar with the market, for you to invest in Eurobonds, you need a minimum of 200,000 US dollar. You multiply that by 130, you get to see what the minimum investments are if you are to go for that particular asset class there. Thank you.
I think people don't know how difficult it is to sell bonds in the secondary market. You should try it and see. The cut there are massive. So if you're intending to hold to maturity, yes, that's good. But more often than not, liquidity is such a big challenge in the secondary market. So George Mohammed in Uganda, and I think works with your sister company, SBG, is wondering how they can participate in this Stanbic asset management in Kenya. Do you have any advice for him?
So we do have the same solutions on the Uganda side, but this is something that we can always pick up individually. So my advice would be send an email directly to us, assetmanagementke@stanbic.com, and we'll definitely be in a position to solution for you, whatever your needs are.
Since we've covered a lot of the questions, my question to you would be, what's your vision for Stanbic Asset Management in this space that you've just entered into? When you see yourself 5 to 10 years from now, what kind of AUM are you targeting? What are your targets for the various aspects of this fund?
I might not answer it from an AUM perspective, but definitely we do have ambitions of being a significant player in this space. But of importance is to ensure that we do serve the needs of our clients. This, as I had indicated earlier, this is a launch that is research driven. Our clients did indicate that there's a need for this particular solutioning. They told us, you offer us great solutions for the medium and long-term investment needs, but for the short term, that's where we needed this product to come in and plug in. So definitely, we would be happy as it progresses and as it grows. But for now, I think of key importance is that we are solutioning for our clients. And I think in the nature of running any business, provided you are speaking to your clients' needs, growth is just a natural process of it. Thank you.
No, we've been unable to bring back Christian, so you get to answer this question at least. What's your advice to younger people who are starting out in the asset management space from your reflections on the journey, some things that you maybe wish you knew at the beginning of your journey that you'd want to pass on to them right now?
Definitely. I think there's a saying that I had mentioned at some point during the course of the conversation that the best time to have planted a tree was 20 years ago. The next best time to plant a tree is actually now. So mine is just to encourage for those of us who are starting off on the investment journey. The thing is just to start. And I think once you do start, the other thing is now to build consistency. Human beings, we are creatures of behavior. So the moment you have it within yourself to be putting a certain percentage of your funds every month for investment purposes, you basically adjust. And at the end of the day, given time and given what we had talked about, the power of compounding, you should be able to quickly see a very big improvement in terms of your savings ability. And basically all this is geared towards ensuring that you have financial freedom. Financial freedom is key, such that even the small emergencies that come your way, these are things that you're able to tackle without necessarily incurring expensive debt, but simply because you have the financial muscle to be able to take care of that. So key message, just start. The best time to have planted a tree was 20 years ago. The next best time is now. Start. And the Stanbic money market and the fixed income dollar offer you a great opportunity to start your investment journey. Thank you.
So I give you one more chance to perhaps reiterate where people can find you and how people can reach out to a Stanbic Asset Management to start investing with them. And then again, also to give a parting shot from you, perhaps a reflection on your journey and the things that you're thinking of accomplishing in the space. So give you a pitch and then tell people where they can find you.
In terms of my parting shots, I think being in this space, which is around saving and investing, I do not preach, what's the word I'm looking for? I do not preach water, I take wine. So it's a journey that I do, even at a personal level, do take it seriously. I ensure as much as possible on a monthly basis, I do put something aside, not only for me, but for my family as well. And how I view it is that I'm basically investing for my future self. So at times we have this notion that ngoja huumiza matumbo. I think it's good to have that aspect of delayed gratification will actually get you somewhere. So you just need to be able to put your foot down and invest regularly and consistently. And at the end of the day, you'll appreciate yourself for making that decision. So as we close up or as we wrap up, again, Stanbic Unit Trust Investment Solutions are live. Simply dial *208# option number 9. And you should be able to follow the prompts and basically have yourself onboarded within less than 2 minutes. And again, within less than 2 minutes, again, you can be able to top up either via bank or via M-Pesa. Again, *208#. For more information, we have our website, www.standardbank.com/Kenya/asset management. And our email address is assetmanagementke@stanbic.com. Thank you very much, ladies and gentlemen, and thank you, Mokaya, for having us.
Pass our regards to Christian. I think Twitter Spaces rejected him today. Sometimes technical issues here and there. Some days it works, some days it doesn't. I really appreciate that you took your time, Jimmy and Christian, to come and join us on these spaces today. I hope our audience has learned enough about Stanbic Asset Management. The contacts, again, will be shared on our Twitter handle. You can find them and reach out to them and get to discuss with them investing and more. We really love seeing people investing and starting even as small as you can, but build your portfolio over time. The younger you are, the better, because you have time on your side in terms of managing to compound your investments and being able to do well in life. So I think creating wealth should be part of your goals. Thank you once again, Jimmy. Thank you, Christian. And thank you, Stanbic Asset Management, for allowing us to have this discussion. Jimmy, hope to see you again soon.
Looking forward, and thank you so much for having us.
Thank you so much for the audience, and goodbye for now.